Hey, what's up, guys? And this is Taylor checking in for webinar 2, numero dos, for the official launch of the brand new Big 3 Squeeze. All right, looks like we are good to go. So as always, guys, a big thank you for being here tonight. And a big thank you to all of you who have signed up for Saturday's class and grabbed the new indicator bundle. So being that tonight is webinar 2, I want to leave more time tonight for some Q&A. So we'll go through a few slides here. We'll cover the basics of the Big 3 Squeeze, all the pretty colors, all the bells and whistles. Then I do want to show you a couple of things that we're currently trading in the Mastery, just a few things that I'm seeing in the charts, and then I'll turn things over to you good people for some Q&A. And being that we just released the indicator last week, it's been really gratifying to get a lot of feedback from you guys and gals. One of the best pieces of feedback that I'm getting, it's like, hey man, this simplifies the process. It's helping me find good setups. But more importantly, I got a lot of folks telling me, hey, this is helping me avoid taking crappy trades. All right, it's keeping me out of the things that I probably shouldn't trade to begin with. And as a guy who built the indicator, that's some really good feedback. All right, now who is the Big 3 Squeeze for? And like I mentioned last week, I think this is going to be a game changer for all of us. So swing traders, day traders, options traders, futures traders, stock traders. And if y'all want, let me know in the chat what your asset class of choice is or your time frame of choice. But yeah, I think for all of us, this is going to be a big game changer. Now, me personally, I'm a swing trader by nature. Even today, though, I had a haircut appointment earlier, so I fired up the scans to the lower time frames. I found a couple things on AMD, found a couple things on QQQ. Just took the scans, took the signals on lower time frames, and had some nice day trading. I did hold on to a couple of my QQQ puts. It's a little bit of a swing trade. But yeah, guys, even if a guy like me who his whole career has kind of lived and breathed off of the weekly charts and the daily charts, if I can use the indicators to find some great day trades, pretty confident y'all can do the same thing. Now, we talked about this in last week's webinar. And one reason that I want to get y'all together tonight, I'm looking for a little bit of help. All right, so I got a question for y'all. But I mentioned last week that, early to mid-May, when I kind of finalized the Big 3 Squeeze, I wanted to challenge myself by throwing some money in an account. And then the only rule was pretty simple. I can't trade anything other than what I would call an A+ setup. All right, so I'm using the Big 3 indicator, and I can trade nothing but that top shelf, what I feel is a picture-perfect setup. And the timing here for a small account challenge, it really could not have been any better. So what the indicators were showing me on the indices, all right, the S&Ps, the QQQ, etc., was that everything was aligned for a really nice move. In other words, the indicators basically said, hey, T, you've got the green light to go out there and trade aggressively. And that's what I did. I used aggressive position sizing. And with the wind at my back, trading nothing but A+ setup after A+ setup allowed me to turn that 2,500 into a little over 25,000 over the course of that 6 weeks. And one thing I was able to do was, along the way, wire out a little bit of profit to reward myself for my good trading. And there's a screenshot of the total profit during that small account stretch. So here's my question for all of you. Part of the bundle for this Saturday's class, you get the class, you get the indicators. You also get access to my mastery. So what I'm thinking we could possibly do for my next small account challenge is do that together as a group in the mastery. So what I'm curious, and if one of the other moderators here can drop in a poll, I'd like y'all to fill out this poll here. Since I'm doing this for us, and this is something I would like for us to do together in the mastery, I'm curious what y'all would like this small account challenge to look like. Meaning, should we do another 2,500 to 25,000? Is it 10,000 to 50,000, 25,000 to 250,000? I'm pretty much game for anything. But yeah, since we're going to do it in a group, I'd like some feedback. So fill out the poll here, and then once the webinar ends, I'll come back and take a look, and then we'll see what the majority vote is. And then together in the mastery, we'll start putting together some some game plans here for a small account challenge. Now with a small account challenge, or frankly, guys, just growing an account of any size, to me, these are the 4 most important factors you have to focus on. Right? One being that we need to trade stocks that are setting up for explosive moves. Right? Emphasis on explosive. The second thing we have to do is accurately determine the direction of that move. Is it going to explode to the upside? Is it going to explode to the downside? And then the third one, and this is really a biggie, we have to accurately determine the timing of that move. So one thing that I have kind of no tolerance for is sitting in a setup for 2, 3, 4 weeks waiting for my paycheck. I'm trying to find that moment in time where I can get long, get short. And if not that day, then a few days after, I'm being pushed into a profit. So timing is a huge piece of the puzzle. And then the fourth thing here, guys, I've kind of come to the realization, you can do the first 3 things. All right, you can trade good setups. You can determine the move, determine the direction. If we can't do that in a fashion where it's automated, those first 3 things are not going to do us any good. All right, so I'm learning more and more about myself, and I think a lot of us that just by nature, the way that we're hardwired, it makes a game of trading very difficult. So I think a big part of successful trading is, can we find a way to eliminate the guesswork, kind of remove the opinions, the biases, and then trade these A+ setups just free of emotion. Basically putting ourselves on autopilot. And I think the great thing about the Big 3 squeeze is that it kind of hits it out of the park as far as addressing those 4 things. So for the explosive move part of the equation, I've been trading for 10 years. In my 10 years, I found nothing better. As far as an indicator that can offer a heads up that, hey, sometime soon here, the stock is gearing up for a big move, I found nothing better than the squeeze. So on the original squeeze indicator, which I know a lot of you trade, whenever you get those red dots, it tells us we're in a squeeze. So at that point, the stock it's building up energy, getting ready for what should be sometime soon a really nice move. And the squeeze does a really good job of saying, hey, here's your heads up. There's just a few things missing. If you trade the squeeze, the $2 million questions with every squeeze. Which way is the squeeze going to fire? Should we be looking to get long? Should we be looking to get short? And then again, as far as aggressive trading, right, being able to take advantage of more aggressive option strategies, being able to up the ante with our position sizing, it's the timing. Which way is the squeeze going to fire, and when is that squeeze going to fire? So notice here for Mara, this thing prints a daily squeeze from May, June, July, and then eventually you get the explosive push. I've got no tolerance or patience to sit through 2, 3, 4 weeks, never mind 2 or 3 months, and then finally collect my paycheck. So my goal with the squeeze is, all right, we got Mara here. Can I find a way either the day beforehand or the day of that squeeze firing to get my trigger and then take my entry? All right, so a big part of that, of course, is trying to get a sense of the path of least resistance. My answer to that has been the Big 3 buy and sell signals. So that's the indicator that we launched last year. And I know a lot of you have the indicator. You've used it with good success. And pretty simple stuff. The green bar, the green arrow, or the green labels, that's the Big 3 buy signal. So that means all of the criteria from my momentum checklist, all of the criteria from my structure checklist, moving average crosses, stacked EMAs, when that signal prints, that's all aligned in the favor of the bulls. So path of least resistance is to the upside. Therefore, I can't get long with one of those buy signals. And then the sell signal is just the opposite. Momentum, structure, everything lined up in the favor of the bears. So what I quickly learned was the ultimate marriage for the style of trading that I like is when we find a squeeze. And again, what does that do? The squeeze says, hey, everybody, I'm fixing to make a move. When we can find that compression and inside the squeeze, the Big 3 indicators printing a buy signal or a sell signal is a trader that's like a match made in heaven. I have a squeeze saying I'm getting ready for a move. I have my buy signal saying momentum, structure, stacked EMAs. Everything is just locked and loaded for that squeeze to fire to the upside. And that pretty much became my obsession. Swing trades, day trades, stocks, futures. The only thing I want to trade is a squeeze with one of my buy or my sell signals. And you'll notice here on Mara, you can avoid sitting through 2.5 months of nasty chop. Instead, wait until the day where you get your signal, and then you take that squeeze higher. So that's kind of where the light bulb went off. Right? That's for the rest of my trading career. That's the only combination I want to focus on. So then I thought to myself, what if I can take the things that I love about the original squeeze, try to tweak a few of the things that I think are missing, and then, for lack of a better term, basically give this thing steroids. Like, can I build a squeeze on steroids that makes my job a lot more easier, a lot more efficient, and in a sense puts me on autopilot? And again, I think I really knocked it out of the park with the brand new Big 3 squeeze. So again, squeeze meets steroids. So not only does this do a great job of saying, hey, here's your moment in time. You've got your squeeze, you've got your signal. That makes my job of calling for direction and timing a lot easier. What these labels do, and I can't explain how much I love these labels. These labels are my brain. They do all my thinking. They make all my decisions. Should I take the trade? Should I get long? Should I get short? Where's my target? They're taking out all the guesswork and doing that for me. So I'm at the point, guys, where I'm a faithful servant to the signals. I don't have an opinion. I don't have biases. What's the indicator telling me to do? That's what I'm going to do. So let's break her down here. The first part that's different from the original squeeze or the Big 3 squeeze is the custom momentum histogram. So what I did was I took the momentum criteria from the buy and the sell signals, and we slapped that on the squeeze. So if the momentum line is above 0 in blue, momentum is bullish. The bulls have got some wind at their back. What we're seeing a lot of in this market is momentum under the 0 line in red. Now the bulls have no wind at their back. So you got your momentum histogram. And then for the squeeze dots here on the Big 3 squeeze, the blue dot means we have an active squeeze. The gray dot means the squeeze is either fired or there's no squeeze at all. And then one quick note here. We played around with and tweaked the compression settings for the Big 3 squeeze. So what this squeeze finds is what I think is the sweet spot. Right, we're not going to find them too early. We're not going to find them too late. This, I think, allows us to find that compression right where we want it, right where we want it. So you got your histogram and your squeeze dots. And then this is where my job gets a lot easier. All right, so like I said, the only combination I want to trade, day trade, swing trade, whatever the case may be, I need a squeeze, and I need one of my buy or sell signals. So down on the squeeze histogram, we have the bull squeeze arrows and the bear squeeze arrows. So that green arrow here, that tells you during your squeeze, we have an active buy signal. So now you're playing a probabilities game. Momentum, structure, everything inside of that daily squeeze is aligned for a push higher. As long as the indicator prints that combination, a blue dot and a green arrow, that squeeze is shaping up to fire to the upside. The opposite would be the bear squeeze. So a red arrow would mean you have a squeeze and an active sell signal. So nowadays, I don't take a trade to the upside if I don't have one of these bad boys, and I can't get short without it. So the bull squeeze and the bear squeeze arrows. And now the real bells and whistles here. The automation of the entire process from these different labels. All right, so these labels tell me, is this a perfect setup? Right, is it an A+ setup for a long, for a short? Labels tell us our targets to the upside, tells us our targets on our shorts, and then that target hit label, that's your nice friendly reminder that you've hit your target, and it might be time to secure your paycheck. So that will go green if we hit the upside target. It'll go red if we hit the downside target. Now, the real lifesaver over the last few weeks have been these labels here for the bull score and the bear score. So this takes all of our criteria, basically spits out a report card for the bulls and the bears. So what you would have seen throughout May, June, July is that the bears had 0 points, and the bulls pretty much had full control. I'll show you in a few minutes on the live charts. What changed over the last few weeks was the scoreboard. So we kind of had a nice heads up here that everything's kind of shifting in the favor of the bears, and that kept us out of trouble. The biggest label of them all, though, is that one right there. Big 3 squeeze A+ setup. So if you're in my mastery, you know the rules. We cannot get long if that label is not green. We cannot get short if that label is not red. The only thing I want to live, breathe, focus on, and try to master is that A+ setup. Super simple, but super powerful. An A+ setup happens when you have an active squeeze, so the modified version of the squeeze. We have one of our active buy signals or sell signals printing, so we can call for timing and direction. And then the kicker here, we only want to trade these moments in time when they're trading in what I would call the entry zone. Give me a squeeze with a buy signal, trading in the entry zone. That's the only thing that I care about. In the entry zone, now I can trade that A+ setup, working a really good risk versus reward. So if that label is green, it says, hey, I have everything you're looking for. This fits all your momentum criteria, structure criteria. You have a squeeze, and you can trade it right here, right now, because you're in the entry zone. Again, if that label is not green, I cannot get long. If that label is not short, I cannot get short. So that alone just automates the entire process in terms of, am I really pulling the trigger on quality setups? That label will answer that question. So since these are the only setups that I live and breathe, how do we go about finding the A+ setups? And as y'all can imagine, we automated that part of the process as well. So the first tool that we have here in our toolbox is the Big 3 Squeeze Radar. So on Thinkorswim, we're able to build out these different columns for different time frames. And then what the indicator tells us is whether or not we have a bull squeeze, a bear squeeze, or a neutral squeeze. So the green Big 3 would be a bull squeeze. You've got your squeeze and your buy signal. Red Big 3 would be a bear squeeze, squeeze and a sell signal. And then the blue Big 3 means you have a neutral squeeze. It's not bullish, it's not bearish, it's just squeezing. So when I took the screenshot here, you can see that ADI had a bull squeeze on the weekly chart, the 3-day chart, and the 2-day. So that makes it really helpful for finding nested squeezes, where you've got 3 or 4 of those things at once. The next thing that we have here are the multi-time frame squeeze labels. And I really love this one. If we have a green label on any given time frame, that means we have a squeeze and a buy signal. The blue label would be a neutral squeeze. The red label would be a bear squeeze, squeeze and a sell signal. And then a gray label would be no squeeze. No squeeze, of course, is a very sad thing. So you got the squeeze radar, you have the multi-time frame squeeze labels. And then when you throw it all together here in the flex grid, this is what your battle station is going to look like. So for y'all doing the Saturday class, and for those of you in the mastery, this is what we're going to rock with. All right, we got everything that we need. We have the buy and the sell signals plotted on the charts. We have our key moving averages. We have the brand new Big 3 squeeze. We have the squeeze labels. We have labels up here for the buy and the sell signals. So I'll show you guys why we got AMD. I'll show you guys why we got short AMD today. But based on the pretty colors here, self-explanatory. Bunch of lower time frame sell signals, and then there's that daily squeeze of that sell signal. So there's a few basics of the indicator and all the pretty colors here. And like I mentioned, I want to show you guys a few things that I'm seeing in the markets. I think they're really important. A lot of shifts in the signals, a lot of shifts in the scoreboard. And then right now in the mastery, we have a couple different trades open that at the moment are A+ setups. So I'll show you what I'm seeing in the markets. I'll show you a couple of setups, and then I'll turn things over to Q&A. So we'll get through a few more slides here, and then we'll get into the good stuff. And then again, as promised, we're sending you home with a nice spreadsheet. But yeah, so as most of you know, we're doing the strategy class on this Saturday. August 19th. And we do have different pricing here for the packages based on whether or not you're a member of any of our trading rooms or if you're a member of my mastery. And we do have special pricing for those of you that already bought the original indicator. So we'll fly through these and we'll get into the juicy stuff. But for the basic package here for $897, you get a 30-day trial to my mastery group. So you get to rock and roll with me for a nice 30 days. You get access to this Saturday's strategy class. We're giving all of you access to the original Big 3 indicator. So the buy and the sell signals, the multi-time frame labels. You're getting access to everything that's part of the new bundle. So the brand new Big 3 squeeze, the squeeze labels, the multi-time frame squeeze study, the radar, the scans, the whole kit and caboodle. And then you'll also get a recording of a special day trading session that I did last week, where I show you how to take the scans and take the signals and then make it work on lower time frames. Basically what I did today in the Qs and AMD. And then we have the elite package for $1697. That gives you access to everything from the basic package, except you get an annual subscription to the mastery. So then I get to work with you for a full year. All right, now for members. So for those of y'all that are part of the options room, the futures room, some of our masteries, you folks get a discount. So the basic package for $797, you get your 30 days of access to the mastery, the Saturday class, the original indicators, the new indicators, as well as access to that day trading session. And then the elite package for $1497, everything from the basic package with the addition of the annual subscription to the mastery. Now, I know a lot of you here tonight are in my mastery. So a special hello to all of you. And I do know that a lot of you already purchased the original indicator last year. So for you folks, visit the sales page after you log into your account. You should see a special discounted offer for those of you in the mastery and for those of you that already purchased the original signals, the OG signals. And as far as the packages here, guys, any questions tonight? You need help with anything? We'll have team members online all night. And you can also reach out to us at 512-266-8659 or shoot us an email at support@simplertrading.com. Now, I do want to mention a few things about the mastery. As a quick heads up here, we are going to raise the prices on August 19th. And the prices are going to go to $597 per quarter and $1997 per year. So get your foot in the door now, and you can lock in that discounted rate of $397 per quarter or $1297 per year. And then just one more look here at everything involved in the bundle. So the Saturday class, the original indicator, the new indicator, and then access to the mastery. So here's how the mastery works. I'm in there Thursday, Friday, and Sunday. And I do sneak in there for an extra session if I can. Sunday morning, we get together at 9 a.m. Central. And that's where we put together our whole game plan for the week ahead. So we run the scans, we cover setups, check the scoreboards. We're doing a lot of checking of the scoreboards. And here's the scoop, guys. In addition to potentially doing a small account challenge together, we've got some really exciting stuff cooking up for the mastery. I can't tell you too much, but come early October, this is going to be the place to be. So I'm really trying to get as many of y'all in there as possible before October. Got some really good stuff coming up. And then a quick note here, we do offer interest-free payments and PayPal credit. So pick whatever package you would like, add that to your cart, and then you can apply for a 0% interest. You can apply for a line of credit with 0% interest for 6 months through PayPal credit. And then again, there's the number for customer service, and there's the email for them as well. So any questions on that, guys, I can come back to those slides. But now for the good stuff here. Now for the good stuff. All right, let me log in real quick. Now, question for everybody here. Did anybody get caught up in that flush today? Or did you get caught up in that flush over the last few days, I should say? Maybe if I put in the right account name, that would help, huh? There we go. But yeah, let me know in the chat here. While Thinkorswim loads up, did anybody get caught in that flush today? Now, we've been waiting for the flush. You get this market where you're kind of stuck between a rock and a hard place. The rock being the 21 EMA and the hard place being the 50 SMA. It makes directional trades really tough. Today, we finally got the break. So I do think next few weeks here, there could be some nice trades lined up. But the first few things I want to show you guys here are our open trades. So right now, we're short AMD and we're short McDonald's. So I'll show you AMD here. We actually got short AMD today. All right, so first question. Why did we get short AMD? Is it because I thought it was a good short? Because of my opinions? Because of my crystal ball telling me it's a good short? No. I don't make those decisions anymore. The indicator makes those calls for me. We got short today because AMD is an A+ setup. It's just as simple as that. If that label over there is red, I can't ask for anything more. I've got my squeeze. The red arrow on the squeeze says, hey, you also have a sell signal. Today we took an entry that offers a really good risk versus reward. But I'm not just shorting AMD because AMD is an A+ short. Our ultimate goal, guys, should be to trade A+ setups in alignment with the overall market. So I mentioned earlier that small account challenge that I did, timing was perfect for aggressive trading. The reason the timing was perfect, 2 or 3 days after I funded that account, look what I got. On the daily chart, on the 2-day chart, and on the weekly chart, the S&Ps had an A+ squeeze. So across 3 different time frames, we had a squeeze of the buy signal. Each of them fired to the upside. That opened up a 2-month window where you had the ultimate wind at your back. All right, so everything they were trading back there, it was an A+ setup, but more importantly, it was in alignment with the overall market. Now, what's happened here over the last few weeks, the picture has changed for the market. All right, the signals have changed. So we stopped getting long, and we stopped even discussing getting long on August 3rd. On August 3rd, we woke up, looked at the scoreboard, looked at the signals, looked at the squeeze. It told us everything changed. So what changed here? You'll notice how the daily chart was no longer printing a buy signal. When you're pretty much printing one from May, June, July, and then down here on that momentum histogram, notice how momentum is supportive of that push higher all throughout May, all throughout June and July. What happened here, guys, coming into August? Momentum finally broke back under the 0 line. The indicators catch all of that. They catch the shift in structure. They catch the shift in momentum. And then what started to happen was the change here in the scoreboard. For the first time since the party started, the bears actually started to get an edge. Structure was shifting, momentum was shifting. And now we're at the point where the bulls, they have 0 points. Momentum-wise, structure-wise, they have nothing to stand on. If you check out the QQQ here, it's the same thing for the Qs. Momentum broke, structure broke, and now that daily squeeze fire is short. You have a bull score of 0 and a bear score of 2. So now my goal every day is I want to wake up, I want to scan for these A+ setups, but again, I have to do that in the direction of the overall market. So what I'm focusing on a lot right now are the bear scans. And I'll go through the daily chart. I'll go through the 4-hour. So here's the spreadsheet that I'm going to send you guys home with. Like I told you, we got every time frame. So the weekly, the 2-day, the daily, the 4-hour, the 30-minute, 5-minute. I ran all these scans tonight for the bulls and the bears. And now on that spreadsheet, you have nothing but A+ setups. So me being a bit more of a swing trader, what I'm focused on right now is that daily bear scan. All right, show me setups on the daily chart where the indicator says, hey, you have an A+ setup. So again, that's why we're shorting AMD. Nothing against AMD. It just fits the bill. Another name that came up on tonight's scans was Starbucks. So what I'm going to teach you guys in the Saturday class, you find Starbucks here on the daily chart. If that label is red, that tells us that the stage is set for what could be a good flush. Now, the real kicker here, the real trigger, you want to check your lower time frames. If we pop open the hood, so to say, to that daily squeeze, look at all of our lower time frames. We have a 4-hour sell signal, a 2-hour sell signal, a 1 hour, 30-minute, 15-minute, 5-minute. This thing's a ticking time bomb. Not only is a daily squeeze perfectly aligned for a flush, everything from the ground up is on the same page. Structure, momentum. And then you also notice, hey, we don't just have a daily squeeze of the sell signal. We have a 4-hour, we have a 2-day, and we have a 3-day. You want to focus on the A+ setups that the market will allow to work. All right, the market allowed back in May, June, July for the opposite of this to work really well. Squeezes and buy signals. Until things change, we're really focused here on the shorts. And before I jump into some Q&A here, let's check the futures, see what the futures got going on. So one thing you'll notice, we are fresh out of squeezes. No brand new squeezes setting up. But yeah, guys, not in good standing. Momentum broke. The bears have control of the scoreboard. The squeeze fired short. Nothing but sell signals on your lower time frames. So yeah, until proven wrong, we are shorting bounces and shorting the A+ setups. But yeah, y'all, there's a few basics on the indicator. The labels, the bells and whistles, and that's a little bit of a preview here in terms of how these indicators have been really helpful as of late. The biggest thing for me, and then we'll do some Q&A, I've never had trouble making a lot of money during a push like that. My difficulty, the difficulty for a lot of traders, how can I keep that money? How do I know when the markets change? How do I know when to take my foot off the gas? And then either go into profit protection mode or actually start to think about some shorts. So for me, it's been such a freeing kind of feeling where now I have an indicator that says, hey, T, it's your time to be aggressive. Until the indicators change, be aggressive. The day that things change, this will stop me right in my tracks. Before I take painful losses, before I give all those profits back. So for me, guys, it's been a huge game changer. I'm really confident for each of you, we can do the same thing. And now my job in the mastery, in the options room, is to spend the next 10, 15, 20 plus years showing y'all how powerful this can be. And again, I think a good start will be doing a small account challenge together. But all right, y'all, any questions, anything y'all want to take a look at? More than happy to hang out for a bit. Here's the S&P futures. Not bullish at all. But all right, guys, let me open up the Q&A here, and we see what we have got. All right, first question. In a multi-week and multi-month stock rally mode, so when the market is in rally mode, okay, so the question is, when the market is in rally mode, can these kinds of signals, can this style of trading outperform the market? Well, yes, really good question. But yeah, Exhibit A would be my small account challenge. And again, guys, I was trading that pretty aggressively. But because the indicator said, hey, you've got the perfect storm for a strong market, I was able to trade aggressively, and I was able to take that 2,500 to 25,000. So from a percentage basis, my account went up 800+%. And obviously the market did not go up 800+%. So yeah, I'm looking for outperformance. When the stars are aligned for a big push higher or a big push lower across the indices, that's my time to shine. Really got to buckle down and get to work. So Mike, good question here. What's a minimum account balance required for a strategy like this? Truthfully, guys, I'd say 2,500 is a really nice starting balance. It can be bigger than that, of course, but granted, with 2,500, there might be some stocks where the options are a bit pricey. So a name like Amazon might be a little bit out of the budget. But what I found is that these setups work just as good on a name like Amazon as they do on something that's a bit more cheaper and a bit more cost efficient. So what you really want to think of is in terms of percentages. And I think 2,500 to 5,000, that's a nice happy balance where the account's not huge, but you can think in terms of percentages, which frankly, regardless of account size, that's how we want to think. Cheetah asks, how many positions do I typically enter in a week? And how long is my typical holding period? All right, awesome question. So I don't have a specific amount of trades that I don't have like a set rule for, okay, I can't have more than 5 trades open. What I've learned the hard way to be really mindful of is your overall exposure. So I could have 10 trades open, but if I'm only risking half of my account per trade, I don't have too much of a crazy risk, right? I'm risking 5% of my account. Just so happens to be across 10 trades. If I instead have 3 trades open, but on each of those trades, I'm risking 10% of my account, well, now my overall exposure is much greater. I've got 30% of my account at risk. As far as what I can handle, I found that 3 to 4 seems to be a nice sweet spot. 3 or 4 trades open at once. But again, I'm way more mindful of, if I have 3 trades open, if I have 4 trades open, what's the overall exposure? What's the overall exposure? All right, guys, looks like I got the poll results here. So let me see. So the majority vote, 63% say, let's start with a smaller account around 2,500. While 37% say, let's do a larger account, something like 25K. That's kind of what I figured. I figured the majority vote would be start with something smaller. And again, guys, when I get you all in the mastery next week, we can talk more about this. My thinking is we can start with 2,500 and work that up to X amount and then just keep the challenge going. I don't think it has to be one of these things where, hey, we've turned 2,500 to 25,000 and now it's game over. Like I said, I'm going to be here with Simpler for as long as they allow me. As long as I can stay healthy. But all right, thank you for the feedback there. That's really helpful. Peter, what do I use for volume and market cap filters in the scans? I got you right here, Peter. So for volume, minimum of 300,000. And then for the market cap, minimum 10,000. And then I don't like trading stocks under $10. Just never been my thing. However, if you do like to trade stocks under $10, obviously I'm a little bit biased, but I think you should trade them with A+ setups. Do I have a rule of thumb for options as far as what contract? Okay, so rules of thumb for time till expiration and strike selection. So as a quick little history lesson here, I used to be the credit spread guy. And mind you, I love credit spreads. I think every option strategy has its edge. What this indicators allow me to do is take advantage of more aggressive option strategies. Actually, I won't even say aggressive. It's allowed me to take advantage of option strategies where I'm getting a better bang for my buck. So I've kind of gone from being the put credit spread guy to now my typical trade is the slightly in the money call or put. So if I'm going to buy NVIDIA, say it's a daily squeeze, I'm looking for about anywhere from 2 to 4 weeks till expiration. But I've really been in the habit as of late of just buying the Delta 70 option. Couple strikes in the money, call side, put side. 90% of the trades that I did in that small account was just straight long calls and puts. And again, that comes down to the timing. If I can find the S&Ps right here, and we're like right on the verge of a big push, I can lean into some long calls, maybe some out the money calls, some debit spreads. So the timing allows for the efficient use of different option strategies. So that's kind of my rule of thumb as of late. Couple strikes in the money. If it's a daily chart, I'm thinking 2 to 4 weeks till expiration. If it's a day trade on a 5-minute or a 15-minute, I'm thinking a few days till expiration. Okay, another great question here. What about 0 day till expiration? So that, of course, guys, has gotten really, really popular over the last few years. Where I like that combo a lot is actually credit spreads. You can do it with the long calls and the long puts, but for the 0 day till expiration trades, if you can find a 5-minute, 15-minute, 30-minute hourly squeeze, and the indicator says, hey, you have an A+ setup, I like those 0 day till expiration credit spreads. So one of the trades that I did on the Qs today, was a 0 day till expiration call credit spread. So for the 0 day stuff, I think, again, 5-minute to an hourly squeeze, really, really solid stuff. Really solid stuff. Daniel, really good question. So if part of the thinking is I want to trade an A+ setup in the direction of the overall market, what Daniel's asking is, well, what happens if the market just goes sideways? And that's kind of where we were, guys, for a few days here. We're loving life, buying the dips, getting long, and then sandwich time. Chop, 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 chop. Say the month of August was nothing but chop, and we're in a 4, 5, 6 week period where we're just trading sideways. You still want to trade nothing but A+ setups. You want to drill down to a lower time frame. The choppiness of the market might not support a weekly squeeze firing along, a daily squeeze firing along. But man, you go find that 5-minute, that 15-minute, that 30-minute, that hourly. You can wake up, find that moment in time, work your trade, and then get the heck out of there before the end of the day. That's one way to trade around the chop. And like I mentioned, I never used to day trade that much. So during a choppy market in the past, I'd either be doing nothing or getting my butt handed to me. Now I'm doing nothing or I'm trading off those lower time frames. What is a typical size? What's a typical ratio between the wins and the losses? What I've been finding as of late, and again, I can't stress enough, it comes down to the entry and the exit. So the only thing I'm going to pound into your head in a friendly manner during the Saturday class is your entries and your exits. That's the key, guys. When we work the ideal entry, we listen to the indicators, we take the trade when we should, we take it off when we should. The relationship that I've seen is that the winning trades, they tend to be about twice as big as the losing trades. So if I buy calls on AMD, well, I'm short AMD right now. So if I buy calls on Google and the trade works, say we're doing a daily squeeze, the profit tends to be in the neighborhood of 50, 60, 70+%. That's with your in the money option. If we take the trade off where we should, when we're wrong, when the indicator says we're wrong, we're losing about half of that. I think the biggest loss I've taken as of late, it was a mastery trade. We lost 50-ish% on ADI. And that was one of the bigger losses as of late. Now, my goal is to get that even better. With my entries and my exits, if I can fine-tune things, I think we can trade these setups in a fashion that's closer to risking 1 to make 3. So we'll talk more about that on Saturday. Let's see, a couple more questions here. Yeah, Rao. So I think And again, I like credit spreads. I like debit spreads. But what Rab was asking here is, being how simple things are and given the timing component, can we just trade simple strategies? Can we just buy a call or buy a put? And I think the answer is 100% yes. With that being said, though, if you love to trade credit spreads, what's your goal? You're trying to collect as much credit as possible as quickly as you can. Guess what? A great way to do that is to find one of these squeezes and sell put credit spreads before the squeeze fires. So there's the fact of it all, guys, or the reality of it all. Day traders, swing traders, options traders, futures traders, equity traders. If we're going to reach our goal, we all kind of need the same thing. All right, the 4 things we talked about earlier. I got to find a setup with explosive potential. I have to call for direction out of that setup. I have to call for timing out of that setup. And I got to make sure I'm doing that in an automated fashion. So if your favorite strategy is credit spreads, what I'm trying to preach is trade credit spreads on nothing but A+ setups. If you like to trade the futures, trade these A+ setups on the futures with the futures contracts. If you like to trade the equity, do it through the equity. All right, whatever your strategy of choice, your time frame of choice, you want to find that moment in time. And then you can make it work for you. Like I said, even I'm doing a lot more day trading. Andrew. So Andrew wants to see an example of a failed trade. So the last failed trade that we had, and I would actually call it a good trade. We didn't make money, but ADI here was a good trade because we listened to the indicator. We didn't get together in the mastery and huddle up in a group and say, all right, guys, well, man, maybe if this happens, we'll be okay. We got plenty of time till expiration. We'll give it a few more days. We're not doing that crap. We bought ADI back here because the label said, hey, you have an A+ setup. That changed on that candle right there. The squeeze didn't fire short against us. The price didn't break under the 50. What happened here was the label said, hey, guys, your cash is now tied up in what is no longer an A+ setup. And my mindset is I forbid that to happen. I want my hard-earned cash working as much as possible, as frequently as possible, but only if the conditions are perfect. So guess what my losing trades would look like in the past, guys? I would probably be taking my exit on ADI today. After taking it on the chin, getting handed a big max loss. Now I'm buying it right here. I'm taking it off right there. Because the label changed. Another trade that didn't work was US Steel. And see how easily we're flowing in and out of trades? Now, had I known US Steel was going to gap up 30% on Monday, maybe would have bought a couple more. But we bought it right here. The label said, hey, guys, you got yourself an A+ setup. A couple of days later, right there, that label went gray. Got to take the trade off. And for so many traders, that's the hardest thing we have to do. I found a good setup. I took a good entry. Now the trade's not working, and now I'm faced with the reality that I took a trade and it's going against me. Guess what? That's trading. That's how effortless it should be. US Steel has the green A+ label. I'm taking US Steel. That label disappears, so do I. And then I'm moving on to a setup that fits the bill. All right, guys, one more question. Couple more questions. And then all my friends in the mastery, I'll see you guys tomorrow at 10:30 Central for a good one. All right, couple more questions here. Okay, James, so really good question. How often am I wrong? Now, in the past, guys, the way that I used to trade, not taking exits when I should, not trading good enough setups, the way that I used to trade, I had to have a really good win rate. Otherwise, I'd have no chance of making money. If I wasn't flawless, like 70, 80% win rate, I wasn't making any forward progress. During that small account challenge that I did for myself, I believe my win rate was just about 50%. So I'm wrong just as often as I'm correct. During that small account challenge, I could have had a 40% win rate, and I still would have made money. Because I'm trading nothing but setups with explosive potential. So when the trade works, I'm catching a nice bang for my buck. But then I got that label there telling me, hey, when it's time to hit the road, it's time to hit the road. So I'm not going through that boom and bust cycle anymore, where I put on a good stretch of trades, and then the few trades that go against me, they go against me in a big fashion, and it's just suffering and misery from there. So collectively, guys, that's what I think makes this a total package. It's going to make my job of finding that moment in time that much easier. But then it's going to give me the step-by-step instructions of how to go about trading it. Entries, exits, profit targets. I don't have to come to that conclusion on my own anymore. And the problem with trying to make those decisions for yourself, again, is that a lot of times that's just based on emotions. If we can base it on probabilities, then by default, we have a massive edge over most other traders. Alrighty. But listen, guys, I'll wrap things up here. If y'all have any questions, I've got a lot of emails to get back to. So I'm working my way out of the email hole. I promise to get back to everyone before Saturday's webinar. So feel free to shoot me an email. We'll put my email somewhere here in the chat. And then you can check me out on the YouTube channel. Check me out on Twitter. And, I hope you guys are as excited as I am. There's been a lot of indicators and a lot of really good indicators that have come out of simpler trading over the years. My goal, all said and done, is that the big three squeeze is one of the top 5. And I think we're on the right path. So a big thank you again for coming out tonight. A big thank you to everyone who signed up for next Saturday's class. Any questions, feel free to shoot me an email. For those of you in the mastery, I will see y'all at 10:30 a.m. Central tomorrow. And again, guys, the biggest thing I can leave you with is, for the time being, subject to change, but for the time being, we are not in May, June, July. So I urge you to not trade this current market like you traded it in May, June, July. The same setups, the same everything that worked back there. It's not going to work as good now. Not based on my opinion, based on all the pretty colors here. All right, so have a good night. Thank you again, and I hope to see you on Saturday. Adios, y'all.